First thing is this concept of the 20 period moving average and the 200, and when the 20 period moving average rises to the occasion and becomes more powerful than the 200 period moving average. Now listen, my traders are taught that there are 5 dominant moving averages that that I want my professional traders relying on. 5 dominant moving averages. The 20 period moving average and the 200 are by far the most dominant of the 5. All right. Now, just want to make sure everything's okay. I like to see myself here. Now, of all five moving averages, traders, all right, of all 5. All right, good, perfect. All right, let me see. That's not cool. Okay, but out of the 5, the 200 is by far the most powerful. All right, so 5 dominant moving averages, the 20 and the 200 are the 2 most powerful, but the 200 is the granddaddy of them all. Now, there is a moment in the market, there's a time in the market where the 20 period moving average actually bullies the 200 and becomes more dominant than the 200 period moving average. And I want to show you. Now, I'm going to use Bitcoin today to demonstrate. I'm going to use charts of Bitcoin today to demonstrate the 3 concepts I want to share with you today, okay? All right, so let's talk about this one. All right, here I just grabbed these charts, guys, just a little while ago. All right, so what you're looking at is a 15-minute chart of Bitcoin, largely today. All right, a little bit of yesterday, but largely today. Now, I want you to note that there are 2 moving averages on this chart. Now, it doesn't matter what time frame, traders. It doesn't matter what time frame that I look at an item with. I will never look at an item without these 2 moving averages, the 20 and the 200. So, of course, the red, all right, the red is the 200 and the blue is the 20. Now, what I want to show you, what I want you to be aware of is the right-hand side of the chart here. Look. I want you to note that the 20 period moving average is under a relatively flat 200 period moving average. Now, this is important. The 20 is under a flat 200 period moving average, and the 20 is rising into the 20 period moving average. Now, I want you to note that this rising of the 20 is sort of creating what some people would consider to be a wedge, or some people call it a flag. It doesn't really matter. All right, flat 200, rising 20. Now, this little triangular-like formation, this wedge or flag or whatever you want to call it, this wedge formation is trapping Bitcoin. So Bitcoin starts to, like a ping pong ball, rattle between both of the moving averages. So the 200 is serving as a ceiling, the 20 is serving as a floor, and there is a war going on. Boing, 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 boing. And then finally, boom. Now, this is very important because a lot of people understand that the 200 is a very powerful moving average, but the rising, when a 20 period moving average is under a flat 200 and it's rising, and the stock or the item is obeying the 20 period moving average on the declines. What do I mean by that? It's the item is obeying the 20, which means that it bumps its head up against the 200 and drops the stock back, but the 20 halts the stock. Now that halt right there is very important. This halt at the rising 20 after the 200 has knocked the item back, that halt tells you now the 20 is going to bully the 200. The 20 is going to break the back of the 200. The 20 is going to propel the stock through the 20. I mean, the 200. And so that's the only moment in time. That's the only scenario when the 20 starts gaining more power than the granddaddy of all moving averages, the 200 period moving average. Now, notice here where Bitcoin fell through the 200, but rallied back to the 200, and the 200 now is saying, halt, who goes there? All right, knocks Bitcoin back. All right. And you see how there's no respect for the 20? So look at this carefully. We rallied to the 200, and the 200 says, where do you think you're going? Get out of here. Boom. Now look at what Bitcoin does with the 20. There's no respect for the 20. It goes above the 20, it goes below the 20, like it's not even there. It's just easily searing through. Up above the 20, below the 20, above the 20, below the 20. But look at the change. We get back to the 200, and once again, the 200 says, you're here again? I thought I told you, get out of here. Get out of here. Yeah, that's right. That's my my New York accent. Get out of here. Boom. It knocks Bitcoin back, right? But this time the 20 halts Bitcoin. That halt tells you the 20 is now being respected. And because it's rising, because it caught the 200's rejection, this is your sign that the 20 is now more powerful than the 200. The 200 is not going to bully the 20 anymore. It has caught its throw. It threw Bitcoin back. It caught it and says, no, not this time, 200. And boom! All right. You see what I'm saying? This is very powerful. I want you to know. All right. I want you to know. Good. I just want to make sure this is good, guys. I just want to make sure we're good. I think we are. I want you to know how powerful this is, because the 20 is to be respected. You understand? So knowing when it's not to be respected is huge. Knowing that one exception is huge. All right. And so that little wedge is a very, very powerful little space there. And it leads to massive explosions, as you saw Bitcoin do, because it's almost like a pressure cooker. You know, Bitcoin's rattling between the 2, and the 20 is saying, all right, now let's get ready to overpower. Boom. And the break of something major usually creates a major move. And that's what we saw in Bitcoin.